hope you guys are doing well. So welcome to another video, and today we're gonna see one of the most basic question from managerial economics. So let's go. Before that, if you haven't subscribed the channel, please do subscribe the channel and watch the previous videos also. Now the first question is, what do you understand by managerial economics? Discuss nature, scope of managerial economics. So let's start with the definition first. What is managerial economics? The word itself says like the study of economics to help in the management of the organization. So let's see. Managerial economics is a branch of economics that applies microeconomic analysis to specific businesses decisions. It combines economic theories with business practices to facilitate decision making and future planning by management. So, the primary goal of managerial economics is to provide a systematic framework for analyzing business situations and making informed decisions. Now, let's look for the nature of managerial economics. So, the very first is applied science. Managerial economics uses economic theories and principles to solve practical problems in business. It is not just theoretical, it focuses on real world application, and that's why it's an applied science. Second is interdisciplinary. It draws from various fields including economics, finance, marketing, statistics, and management. So there is a interdisciplinary nature allows for a comprehensive understanding of business dynamics. Decision making tool. The primary focus of managerial economics is to aid in decision making processes. It provides tools for the framework to analyze business problems and evaluate alternatives. The fourth one is normative and positive analysis. Managerial economics encompasses both positive analysis, what is, and normative analysis, what ought to be, allowing managers to understand current condition while considering ideal outcomes also. And it's a dynamic. The principle of managerial economics are adaptable to changing market conditions, technologies, and consumer preference, making it relevant in the consistently evolving business environment. So these five are the nature of managerial economics. The very first is it's a applied science. It's not based on theory only. Interdisciplinary because it draws from various fields including economics, finance, marketing, statistics. So this nature allows for a comprehensive understanding of the business dynamic. Decision making tool. We study economics for the management of the to take decisions for the management of the organization. Normative and positive analysis. Positive analysis is what is, and normative analysis what ought to be. And the last is dynamic, that means it is adaptable to the changing market conditions. Now let's move to the scope of managerial economics. The very first is demand analysis and forecasting. Understanding the consumer behavior and predicting future demands for product or services. And this includes studying factors affecting demand and using statistical method to forecast sales. Now take an example that a smartphone manufacturer uses historical sales data and market trends to forecast demand for its new model, allowing it to plan production level accordingly. Second one is production and cost analysis. Now the managerial economics analyze production processes to optimize efficiency and minimize cost. This involves understanding the relationship between inputs and outputs, and as well as between fixed and variable cost. Let's take an example that a car manufacturer analyzes the production process to identify the bottlenecks and reduce costs by implementing lean manufacturing techniques. So these are the examples where we can use or where we are using managerial economics in the organization. Third one is pricing decisions. Determining optimal pricing strategies based on market conditions, competition, and cost structure. This includes price elasticity analysis and pricing model. Again, let's take an example that a software company may use price elasticity of demand to determine how a change in price will affect total revenue, helping it set competitive prices for its product. Next is market structure analysis. So, evaluating different market forms like perfect competition, monopoly, oligopoly to understand competitive dynamics and strategize accordingly. Example, like a new entrant in the beverage industry assesses whether it will operate in a monopolistic competition or oligopoly environment, influencing its marketing and pricing strategies. The next is managerial economics help in profit management. How? Let's take an example that a retail chain conducts a break-even analysis to determine the minimum sales volume needed to cover cost before it can start making profit. So, assessing profitability through cost volume profit analysis, break-even analysis, and profit maximization strategies. The next is capital management, making investment decision based on capital budgeting techniques such as net present value and internal rate of return. Let's take an example that a startup evaluates various investment projects using net present value (NPV) calculation to determine which product will yield the highest returns over time. The next is risk analysis, identifying and managing risk associated with business decisions, including market risk, credit risk, and operational risk. Let's take an example that an airline assesses the risk associated with fluctuating fuel prices and implementing hedging strategies to mitigate potential loss. Strategic planning, formulating long-term strategies by analyzing market trends, competitors' behavior, and internal capabilities. Example, a tech company analyzes competitor product and market trends to formulate a long-term strategy for product development and market positioning. The last one is government policies and regulations, understanding the impact of government policies on business operations, including taxation, subsidies, and regulation. So take an example of a pharmaceutical company evaluates how changes in healthcare regulations will impact drug pricing and distribution strategies. So, to conclude, we can say that managerial economics is essential for effective decision making within the organization. Its nature as an applied science with a wide scope allows business to navigate complex economic environments, optimize resources, achieve strategic objective by applying economic policy principles to real world scenarios. Managers can enhance efficiency and drive growth. And in the scope, we have already discussed the real world scenarios with example where we can use economic policies to enhance and to efficient or effective in the growth. So in this question we have discussed what is managerial economics, the nature of the managerial economics, which include 5 points: that it is applied science, interdisciplinary, decision making tool, normative and positive analysis, and dynamic. And in the scope of managerial economics, we have seen with the help of examples that where the study of managerial economics is used in our day-to-day life and how it can enhance the business or organization. So we have studied that it helps in demand analysis forecasting, production cost analysis, price decision, market structure analysis, profit management, capital management, risk analysis, strategic planning, and government policies and regulations. So this is all for this video. Hope you like the video. Please do subscribe the channel and bye bye. Meet you in the next videos.